Stop. You paid the premiums. You bought the promise. You think your family is safe. But I guarantee you that thick, terrifying PDF sitting in your drawer is hiding a disaster waiting to happen. You see, 9 out of 10 people make one critical mistake. They sign the document, file it away, and assume everything is fine. They ignore the dense legal fine print. But that fine print, it contains the secret traps that can cancel your coverage, slash your payouts, or divert the money to the wrong person, even an ex-spouse you forgot to remove. This isn't just paperwork. It's the rule book for your family's financial survival. In this video, we are going to crack the code on the 3 most dangerous pages you absolutely must read right now. The exclusions page, what little known activity voids your policy instantly? The beneficiary box, how one single common mistake can send your money to the state instead of your kids. The grace period trap, miss a payment by 1 day and watch your entire investment vanish. You bought life insurance to secure your legacy. Now let me show you how to ensure that legacy doesn't explode in your family's face. We'll start at the very front with the page often called the policy summary or declarations page. This is the heart of your contract, the quick reference version. You must review this page carefully. Here you will find your name as the owner and the life insured. You'll see your beneficiary or beneficiaries listed by name. This is critical. Is it still correct? Is an ex-spouse still listed? Are your children named? Or is it just a generic phrase like, my children, which can lead to ambiguity? Check this now. Next on this page, you'll see the policy number. This is the key identifier you'll use for all communication with the company. You'll see the policy date or issue date, which is when the contract officially began. Then the face amount or death benefit. This is the core number, the amount that will be paid out upon your death, assuming all conditions are met. Right beside it, you'll see your premium amount, how much you pay, and the premium mode. Is it monthly, quarterly, or annually? Paying annually often saves you money. Now look for the policy type. Is it a term life policy? If so, the term length, perhaps 20 or 30 years, will be clearly stated. Is it a whole life or universal life policy? That will be noted here. This section also lists any riders you purchased. Riders are add-ons like a waiver of premium if you become disabled or an accelerated death benefit rider that allows access to funds if you become terminally ill. They are part of your contract and have their own costs and rules. After the declarations page, we move into the meat of the document, the definitions section. Insurance companies are precise and they define their terms. What do they mean by total disability? What constitutes an accidental death? How do they define suicide within the contestability period? These aren't casual definitions. They are the legal parameters that will be used to interpret every part of the policy. Skimming this section is essential to avoid misunderstandings later. Following definitions, we find the core promise, the benefit provisions. This section outlines exactly what the insurance company agrees to do. It states the death benefit, but more importantly, it details how it will be paid. Will it be a lump sum? Can it be paid out as an annuity over time? This section also explains the incontestability clause. After your policy has been in force for a period, typically 2 years, the company cannot void the policy due to a mistake or omission on your application, except for fraudulent misrepresentation. This is a powerful consumer protection. Next, we encounter the premium provisions. This isn't just about how much you pay. It details your grace period, usually 30 or 31 days. If you miss a payment, your policy isn't immediately canceled. You have this grace period to make the payment and keep the policy in force. This section also explains what happens if you fail to pay, which is a policy lapse. For term insurance, the policy simply ends. For permanent policies, it may enter a period where it uses its cash value to pay premiums, or it may convert to a reduced paid-up policy. Understanding your grace period and lapse rules is crucial to preventing an unintentional loss of coverage. Now, let's talk about a critical, often misunderstood section, the exclusions. This part tells you what the policy does not cover. Nearly all policies have a suicide clause, which states that if the insured dies by suicide within the first 2 years typically, the company will not pay the death benefit. Instead, they will refund the premiums paid. Another common exclusion is death due to an act of war. Some policies may have exclusions for dangerous activities, like piloting private aircraft. You must know what is excluded to have a clear understanding of the promise. If you have a permanent life insurance policy, such as whole life, universal life, or variable universal life, you will have a section dedicated to cash value or policy values. This is the savings or investment component. This section will explain how the cash value accumulates, whether it has a guaranteed interest rate or is tied to market indexes. It will detail any fees or charges deducted from the value. It will explain your options, such as how you can take a policy loan against this cash value. Remember that unpaid loans with interest will be deducted from the death benefit. It will also explain how you can make a partial surrender or withdrawal. This is complex, but vital to understand if you are counting on this policy as part of your financial strategy. We then have the rider section, which details any add-ons you purchased. Each rider has its own benefits, premiums, and rules. For example, a waiver of premium rider will specify exactly what definition of disability triggers the waiver and how long you must be disabled before it takes effect. An accidental death benefit rider will define what qualifies as an accident, often with its own exclusions. Don't assume you know what a rider does. Read its specific terms here. Finally, towards the end, you will find the general provisions and information about policy changes and reinstatement. This covers items like how to assign the policy as collateral for loan, or how the owner, which may be different from the insured, can transfer ownership. The reinstatement provision is important. If your policy lapses, you may have a period, often 3 to 5 years, where you can apply to get it back. But you will likely need to prove you are still insurable and pay all back premiums with interest. Your document will also list the insurance company's contact information and procedures for filing a claim. Keep this accessible with your other important estate documents. You see, your life insurance policy document is a contract, not a pamphlet. The declarations page is your quick reference guide. The definitions set the rules of the game. The benefit provisions are the core promise. The premium provisions and exclusions define the limits of that promise, and for permanent policies, the cash value section is a separate savings contract embedded within. Taking an hour to read and understand this document today prevents devastating surprises for your beneficiaries tomorrow. It ensures the safety net you think you have is the one that actually exists. You've made the responsible choice to get coverage. Now take the final crucial step of understanding exactly what you own. It is the ultimate act of ensuring your intentions are carried out precisely as you planned.